welcome back to the ICT Mastery Mentorship. In this episode, we're going to be going over optimal trade entry. I have no clue what episode this is. Let me just check really quick. Hold on. Oh, what is this? 15? Haven't posted the other one yet, but yeah, episode 15. Okay, we're going over optimal trade entry. Optimal trade entry, right, is basically premium and discount. You remember how we went over premium and discount in episode 4, 3? I forgot which episode, but in one of those episodes, we went over premium and discount. It's basically premium and discount, but within a dealing range, aka a premium and discount range, there is a point in that range called the optimal trade entry. Okay, now it looks something like this. I'm going to show you real quick. It looks something like this. Okay, you draw your normal little dealing range like that. Okay, there's your dealing range right there. But we add this. What's that? Oh my God! Wait. I'm looking at price and it came up to that level and then it dropped. What the heck, JJ? What is this? What are you showing me? Huh? What is this? Ha, that's funny. Optimal trade entry, okay, is the levels in your FIB or the levels in your dealing range. It's the 0.618 level, the 0.705 level, and the 0.69 level, okay? These levels right here are called the optimal trade entry levels within a dealing range. Okay. From swing to swing is a dealing range, correct? As I taught you before, that's a dealing range or where you want to draw your premium and discount range to see where you want to market. From swing to swing, that's how you draw it. Okay, so regularly it'll look like this. Regularly it'll look like that. Okay. But if you do this, bang, that's how it looks. In a dealing range, right? For example, let me add the 0.5, wherever the 0.5 point is. There you go, right there. So, for example, we have the optimal trade entry level, and then we have equilibrium, okay, that divides the premium and discount. For example, if the swing to swing range is bearish, right, or if we have a bias of just strictly bearish, what you'll want to expect price to do is within this dealing range, right, you want price to come back up to the optimal trade entries right here, optimal trade entry levels right here, and go down, okay? So this is a point of reference here, or institutional reference point, okay? You want to see price bounce off of these levels, okay? And I'm going to teach you how to use them. I'm not just going to say, okay, price comes up, price goes down, and then end of episode. No, come on. Really, do you really think I'm going to do that? Like, just say, okay, 0.618, 0.705, 0.79, and price is supposed to resist off these levels, and then, okay, there you go. That's all you need, and episode's over with. No. Okay, this is why this is called a mentorship, not a 9-minute video. Well, this probably is going to be a 9-minute video. I'm saying that, but anyways, going into optimal trade entry, around these levels, you want to look for PD arrays. PD arrays, as in fair value gaps, or points of liquidity, okay, or order blocks. I taught you about order blocks before, or order blocks, okay. And if we pay attention here, we have an order block right here. Okay, where is it? Uh-oh, wait, let's see. Oh, wow. Oh, wow, you see that? Do you see where that matches up? Oh my God, I'm tripping out. My mouse is not cooperating right now. Do you see that order block? Yeah, pretty cool, isn't it? Yeah, very cool. So right here is the start of the order block. Price comes into the order block, wherever my order block tool is. Order block is right here, right? Now, where's the order block at? It's within this range here. This range here. What is this range, JJ? It is the optimal trade entry range. You want to look for PD arrays within this range that will confirm that the optimal trade entry actually worked, okay? Once you see the PD array within optimal trade entry, you can either use optimal trade entry as your entry, as in once it comes up to the optimal trade entry levels, it shows some sort of resistance or willingness to bounce off of the optimal trade entry levels, then yeah, you can go ahead and enter. But clearly, as we see, if we like remove all these drawings, we can see that price didn't really resist off of these levels. It just kept pushing through it, which isn't a bad thing, okay? It's not a bad thing. Sometimes price is just going to simply do that. It's not a bad thing that price is pushing through it. It's going to eventually resist and bounce off of it, but it went up very, very slowly, and then it said, okay, bye. There's a again. That's funny because this, I didn't catch this one. I was kind of mad that I missed this. Oh my God, I wish you guys would have heard me yapping to my dad about how I was asleep when I missed this, and I was anticipating this a whole week. Oh my God. I'm just yapping all day. Because, dude, this would have, like, quadrupled my account. But whatever. Going back into optional trading tree. Now, let's implement this into a bias or a trade setup, okay? So, let's go ahead and look. Let's go ahead and look around. Look around on these little charts here. So, if we look before then, we have a high up here. Bang. Price comes up and purges it, okay? That's liquidity purge. Why? Because price comes up, and then price immediately comes back down. It doesn't push through it. On one candle it does, but does it push through it literally? Does it literally go higher as price all the way up here? No. Okay. So this is a liquidity purge. Price comes down. Ooh. Purges these lows here. So it's showing that it wants to go lower by purging these lows here. Or having a run on these lows. It purges the highs, then it has a run on these lows. Do I have a liquidity run tool? Wait a second. I don't. That's very surprising. I'll just set it as sell side liquidity then. Because why not? So price comes up to this high here, purges it, right? Showing that it wants to go lower. Then it really proves itself by taking out both of these points of sell side liquidity. It's like, okay, do I really have to show you like what I want to do? And bang! And bang again! See? Do you see that now? I want to come down to the lows. Do you understand that now? Okay, I think you finally understand it. Then we still have this low all the way down here. So this is a point of liquidity that price wants to come and seek. Now if we draw the optimal trade entry levels again. Up. Bang, look at that. Nice, very nice. If we just set it to strictly OTE, there's your ting right there. Price comes up to the optimal trade entry. You notice that there's a fair value gap and a what? And a order block right here. Okay? Once you start finally seeing price resist away from these levels, start having some displacement, you enter. So let's say, for example, you enter about right here on this candle. So we can say, I don't know, right there, okay? And you say your stop at this high right here, at the last high that was created before it resisted off of the optimal trade entry levels. Our target would be either this low here, this previous low of the optimal trade entry, and actually let me teach you the targets of the optimal trade entry, okay? These down here are called standard deviations, okay? You're going to learn more about standard deviations in the future, but for this, we'll just call it optimal trade entry targets, okay? These are the optimal trade entry targets right here. You want to pay attention to these because it'll show you where price really wants to go, okay? The 0 is your first target, okay? That's just the low of the range that you've drawn for optimal trade entry, okay? That's your first target right here. Then you have the 0.27, which is your second target. That's 27% deviation of this range, okay? It's taking 27% of this price from here to here, however many points, but however many points that is. That's probably like 700 points. And it's taking 27% of that and deviating it lower to show you where price wants to go. If we look, this deviation or this expansion of this range lower is resting below what? That point of sell side liquidity. So it's saying that this point of sell side liquidity is good, and if you wanted to target this, you can. This point right here, if you wanted to target the 27% level, that's good to target because it is right under this point of liquidity down here. And these are also targets, and just how I explained it with the 0.27 or 27%, it's the same thing. If these levels are resting below an important level, like in a point of liquidity, or if it's in a unbalanced fair value gap or imbalance that's resting somewhere, then yeah, you can use these targets, or it's showing you that those places that it lands is good place to target. Well, like I said, you can simply just target that if it lands close to and beyond something. But these two don't. They land beyond this, but are they close to it? Nah. Is this close to it? Yep. Can we target that? Yep. Bang, right there. Took a while, yeah, because it consolidated a little bit. But once New York session hit, bang, look at that. Crazy, isn't it? Absolutely crazy. That's euro dollar for you. It's a bastard. I'll tell you that. It's a bastard. It's a bad boy. But once you get a collar on that bad boy, get a collar on that doggy, oh yeah, boy, making money like back in the days, like in 1900s. But with all seriousness, that's how you use optimal trade entry. We're gonna go over this a couple more times. Okay, I'm going to go over this a couple more times just to make sure you have a very, very good understanding of what this is. And if we look on a larger perspective, it happened again. From this high to this low. And then if we pay attention over here, look at that. See how the optimal trade entry levels land on this fair value gap too? See that? So it's basically supercharging or confirming that price can resist off this optimal trade entry and it can be good. We can mark this as fair value gap right about there. Price comes up to it very, very slowly. Okay. Then it comes down right along here, exits the optimal trade entry levels. Then what it does is it comes and purges liquidity right here. Okay, it's like, okay, we came into the fair value gap and the optimal trade entry, and then we purged in liquidity. And then we came down, created a 4 consecutive candle order block. That's going to be our entry. You understand me? And we got a fair value gap right there. We come up into that order block. We take our entry, our sale right there. Set our stop loss right at that order block. Then we go ahead and drag that take profit all the way to one of these lows right here, boy. One of these lows right here. Or, listen to me. See those deviations? Does it land anywhere? Does it land anywhere? Nope. As you can't see, no, it doesn't. So, in that case, since these deviations don't land on anything, you simply take that 0 target right there. And does it hit it? Let's pull this out. Oh my god. Do you see that? Is that crazy? Okay. Bloop, 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 bloop. Bloop, 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 bloop. Bang. Right there. Crazy. You see that, boy? That's how you take an A+ trade. Your boy JJTrades got you with the trades, man. Right there. On the dot. Then it keeps dropping afterwards. Very, very cool. But yeah, that's optimal trade entry. Okay, if you want to go over it one more time, sure. You're dismissed to exit this video. But if you want to keep going, sure. Let's go over some more examples. All right. So 1, 2. Optimal trade entry right there. You see that? Very, very cool. Very, very cool. Price purges liquidity back here. This high. This is a liquidity purge. Liquidity, it came up to some point of liquidity. Then price came up. Once you start seeing some resistance off these optimal trade entry levels, you can take sells. And as you see, it does because look at the wicks. See how it's showing some sort of rejection. Once we see price finally displaced, that's our sale. We can say we saw it displacing right around here. Oh, actually made 2 of them. But we can set it at this high right here. Then, if we got any deviations landing anywhere, and clearly we do not, so we can go ahead and drag this target right along here, and bang. There is your trade right there. I know it looks very weird because it's a 0.6 risk to reward. It's literally a negative risk to reward. But still, a trade is a trade. Okay, understand me? A trade is a trade. And that is just, it is what it is, I'm saying. But if you want to drag it down lower, that's your 2 risk to reward. But still, here's the end of this episode. Here we are. We reached the end. Yay! No more hearing JJ yap about from trade entry. We can finally end this video. No, but with all seriousness, this is the end of episode 15 of the ICT Mastery Mentorship, and I'll see you on the next one. Peace.